This stimulus is really about, helping to address all the problems that have built up largely because of, the property issues, the debt, the local government issues, largely because of those. So it's trying to address those. It's trying to do it in a gradualist way. We've been saying for a long time that, we think the PBOC has it under control. We think that they will do a longer term strategic, more drawn out policy response. It won't be the kind of knee jerk that we've got used to from maybe Western policymakers, and therefore, it's probably going to lack the shock and awe that we might see sometimes from the Fed. But that's why we thought the response over the last couple of weeks was a huge overreaction to the upside. This wasn't about fixing broken markets. This was about helping to heal a wounded economy, and we think that's a long-term, very much a long-term project. And as I say, we think the Chinese policymakers have a decent handle on it. So any overreaction to the sell side is a buying opportunity. But any overreaction on the buy side is definitely a profit-taking opportunity. So we've been in really big, brutal profit-taking mode for the last couple of weeks, but we're not quite ready, I think, to get back in there yet. We're waiting for maybe either better entry levels or more compelling policy stories.
All right, more compelling policy stories. We're looking at no specific figures for the stimulus, and you're content with that. Looking ahead, though, we are going to be getting at the end of the week the China economic data, Q3 GDP. Of course, a lot of this is to ensure that China can hit its annual target of around a 5% growth. With all of it that it's unleashed now, do you think it can do it?
Oh, I'm sure they will. I'll be really surprised if they don't. I think that will be a major blow. I think psychologically to the economy and to the markets, that'll be a major blow. But I don't think it's going to require anything too dramatic. As I said, I think we're seeing a long-term project. I think this is a process. We've got the data coming out. We've got the end of month conference. So we've got all of that stuff happening, and I think we just gradually see the taps open slightly wider and slightly wider. I think one thing that people forget is Chinese policymakers are very keen to avoid repeating a lot of the mistakes in the West. They don't want to be fixing a debt problem in local governments and in the property sector with more indiscriminate debt. So I think that's why we're going to see this gradualism, and that's probably very good for the long term. It probably is creating something more sustainable. So I think they will hit this year. I don't think they'll massively surpass in the way that they did in the boom years, but I think they'll probably hit it almost bang on. And I think it'll be muted but positive for a while. I think we're on a very much a long-term positive trajectory, but it's not shock and awe, and the market responses therefore should be fairly constrained. This is a long-term very positive story that in the short term isn't a particularly compelling value opportunity.